Welcome to the People's Podcast, an employer's resource by Group Management Services. I'm your host, Alyse Kimble.
This podcast does not constitute legal or financial advice. Its accuracy, completeness, or adequacy is not guaranteed. Use the information at your own risk. Consult an attorney or financial advisor before taking any action.
Hello and welcome back to the People's Podcast. I'm sitting here with Tom Krause, CPA from Corrigan Krause, CPA and Consultants. He is the Director of Consulting Services. Thank you so much for being here, Tom.
Thanks, Alyse. Thanks for having me.
Yeah. Today we are actually going to talk about something really exciting, and it's going to be maintaining and improving your business financial health, almost like a doctor would help consult you when you came in for maybe something that was ailing you. So we're going to talk about being proactive with your business and being less reactive throughout this podcast. But we're going to start today with taking the time to understand your business in 10 ways. So do you want to get us started?
Sure. It'd be
Yeah.
Good. Thanks, Alyse. Thanks again for having me.
Of course.
I appreciate it. You know, so many business owners don't spend time in some of the areas that they need to. You brought up proactivity and how important that is in a business to be proactive. And there's various facets of their business that show up if you don't take care of them. And they eventually will show up. They just show up. You never know when, but it's going to show up if you don't take care of things.
Yeah.
And so what we do with a lot of our clients in the consulting area is to make sure they really understand their financials. And believe it or not, it's so important how many clients just don't understand their financial statements, don't understand the different facets of it. And I think that's so important, and you need to spend some time with that.
Yeah.
And in some of those ways we talk about that, we start at the very grassroots of your business and understanding those financials. And it may sound boring, but you certainly got to spend the time to do it, because I've seen businesses, I've consulted with thousands of businesses.
Yeah.
And it's been so enjoyable to see them grow as a business, understand their numbers, and be able to make decisions timely.
Yeah.
And knowing their financials helps them with that. Once you know your financials, it opens up the world to opportunities.
That's like learning a new language, right?
It is.
Yeah.
It is.
And when you actually are able to understand what the numbers are telling you, you're able to be more proactive.
Absolutely.
What you're doing, because they're telling you things in advance, right?
Yeah.
And you can make those changes as you go.
Absolutely.
Love
Yeah,
that.
they are. And a couple basics of your financial statements are a balance sheet, and everybody's scared of a balance sheet. Everybody goes right to the income statement. When we have strategy meetings with our clients, we start with the balance sheet. The balance sheet is a picture of a point in time.
Okay.
And it tells you everything you own and everyone you owe.
Okay.
And it's so important to know that, because those decisions are the decisions that will to allow you to make some different decisions in your business. Mm-hmm. And so many people just don't understand that. So I would just highly recommend that with their CPAs, they understand how is your balance sheet affected and how is your income statement affected.
Okay.
Different things like what's your gross profit. Mm-hmm. People don't know that.
Yeah.
That's the lifeblood of a company, is your gross profit.
Yeah.
That dictates how you're going to do. And if you don't know that backwards and forwards and understand how to price properly, how to do those type of things, you're missing opportunities.
Absolutely.
So but the balance sheet is given. COVID was a real. What I said, things come out in time eventually. Uh-huh. COVID was interesting in so many ways, detrimental in so many ways, but positive in so many ways. And I think what happened was clients that had a poor balance sheet, which means they weren't in good position, couldn't weather the COVID storm.
Yeah. Did that mean they had a lot of debt, Tom?
Yeah. It means
Okay.
that maybe they had a lot of debts, and maybe they just didn't understand their overall financial position. But yeah, I'd say they had a lot of debt, maybe not smart debt.
Okay.
They had different debts that they didn't know. But if they were the opposite way, if they had strong balance sheets, good cash, good
Yep.
receivables, good inventory, and their debts were in line, mm-hmm. it offered opportunities for clients. We had clients grow during COVID because we spend a lot of time with our clients to position their balance sheet for growth, mm-hmm. and to take opportunities. They have opportunities, but they can't implement them without a solid balance sheet that banks are willing to lend with.
Okay.
That gives you the abilities to weather some storms and understand when you can make that next move. It's a chess game. You have to know your balance sheet, and that allows you. I've had clients over the years that we've cleaned up that balance sheet, and a lot of times they'll say, why are we spending so much time with organizing our debt? Why are we spending so much time organizing our financials? And I said, because when that opportunity comes up, you have to be able to pounce. And when that's in good shape, nothing better than that. I've had clients that we've gotten $2 million lines of credit, and they don't need it. And the reason they get that $2 million line of credit is I said, when an opportunity comes, you have to be able to go. And it may not last very long.
Right.
And I've had clients over the years that have been able to implement that and make sure that they were in good position. So COVID actually produced a lot of opportunities because a lot of companies failed during that time, and they failed because of their balance sheet. If they had a good balance sheet, I always say that the balance sheet is king, cash is queen. Everybody says cash is king.
Yeah.
You always hear that, cash is king. Well, I can tell you, I've known plenty of business over the years that had plenty of cash that couldn't survive. So your balance sheet really is the key. So I think that's one key fundamental of your financial health, is making sure you understand that.
Okay.
And a lot of business owners just don't spend their time to really understand and implement that.
Should they be asking a CPA just to walk them through, hey, can you walk me through my balance sheet and just help me understand what each of these line items mean?
Great idea.
Okay.
And that's what we do when we spend time. We call them strategy meetings.
Uh-huh.
When we spend time with our clients, we start with the balance sheet, and every quarter is that balance sheet. Every line item is, they understand what's in that line item. It's surprising. We've had new clients come to the firm, and their accounts receivable they're just not in good shape.
Okay.
They're not collecting timely enough. Then what happens is then a debt becomes old, and if they
Yeah.
would have attacked that debt sooner and that receivable, they probably would have been collected. But time goes on, and all of a sudden a business goes out of business that's going to pay you.
Yeah.
And so they're not paying attention. So that's how we start our strategy meetings with balance sheet. In fact, I always laugh. The balance sheet is like page 1 and 2, and your income statement is page 3 and 4. Let's just say. I don't even let them look at page 3. They're not allowed to. Nope. It has to stay there. Lockdown. Don't look at it. We're going to go there. Because remember, if your balance sheet is wrong, your income statement is wrong.
Yeah.
It's either been wrong from the past, or it's been wrong today, or it'll be wrong in the future. And so it affects the operations going forward. And if you're just really not looking at that on an ongoing basis, you're just going to have some issues. So it's going to affect your business in a lot of ways.
Yeah.
Then when we get to the income statement, they feel comfortable that they've accounted for all the assets that they have and all the debts that they have.
Okay.
And that there's not anything hanging there. And then me as a consultant are confident that we can go through that income statement with confidence that it's correct, that it's really telling you the right information. We had a client once that was not accounting for their inventory or their accounts receivable. They were called cash basis. And they couldn't get financing. And the bank would not give them financing. But they had all these assets. They had a lot of inventory, a lot of receivables. And so we changed our basis of accounting. And this client was about $8 million in revenues at the time.
Okay.
Doing well.
Yeah.
$8 million. But they said, we've got all kinds of opportunities that the bank won't give us any money. And I said, well, we've got to change how your balance sheet is formatted. So we took the time to basically get all those assets recorded properly. The bank then was able to give them financing. They're now $32 million in revenues. They won an SBA award in Cleveland for the largest impact in the Northeast region of the United States, for the most impact over 2 years.
Wow.
And it was just changing their balance sheets.
That's amazing.
Isn't that amazing?
That's amazing.
Has nothing to do with their income statement. It had to do with
Right.
their balance sheet, that they were financeable. So those are the types of things that happen that some businesses just aren't paying attention to.
Okay.
And so even from a lending standpoint, the bank is looking at your income statement to see how you're doing, but they're equally spending time on your balance sheet. So I think it's something that you sometimes you're just not putting the two together. So but that's how we start our strategy meetings, and it's a lot of fun, and and sure enough, something comes up that they want to talk about more. So and that's the whole idea of the strategy meetings that we do, and that's one of my business health, financial health, is take that time with a strategy meeting with your advisors, and those strategy meetings for clients will last 3 to 5 hours once a quarter, and many times. I know I'm at those meetings. They don't want them to end. they just enjoy talking about their business.
Hopefully you like have it over dinner or something.
I wish so. Yeah, so I have had wine and cheese come out at like
Perfect.
1:30, so that's
Yes.
usually pretty good. But it's you spend that time, and why wouldn't you spend that time? You spend that much time at a Browns game. Why wouldn't you spend that much time just talking about your business?
Investing in
somewhere?
your business, yes.
Exactly.
Absolutely.
Just spend a little time with that. So.
How often do you typically recommend that a business owner like have these kind of check-ins?
Yeah, I think once a quarter is fine.
Okay.
Because when you're having these meetings, what else you're trying to do, and it's what's interesting is that with these clients, we'll have years of data, so we see trends. So when you have your meetings quarterly, you can kind of envision some trends.
Yeah.
And I've had clients where we have their financial information for 4 or 5 years. And all of a sudden, they're seeing a trend that they didn't even know existed.
Okay.
Because you're spending time.
Yeah.
So that same basis of timing of the businesses, I think makes it more useful.
Yeah.
Because you're understanding that. So I think quarterly is fine. We make sure that financial statement is good. Mm-hmm. We do that first.
Yeah.
And then we put a large agenda together of items that we just brainstorm. So while the staff and myself are maybe talking about that client, we're brainstorming at the same time. We're sitting back thinking about it. And it's funny how much our staff learn from those meetings because they're hearing the idea. So they're becoming better business advisors. And so then you're ready to really spend that time with your client to be able to go over it. But I think quarterly is fine. You just sort of see the trends. And I think it's enough time that maybe if you made a change, there'll be an impact.
Yeah.
Things like that. So I think that works out well.
I think I love that because we teach a lot about habits to especially our sales teams.
Yeah.
We're doing it's kickoff season right now for a lot of businesses. Their sales teams are going to like kickoff meetings, whatever, across the country, and we very much structure our goals here in a quarterly basis because you can catch something bad, right? Within a quarter typically. So if you're not improving within a quarter, you got to really look at yourself and be like, why? Because that's 3 full months.
Yeah.
And then make those changes then so you don't end the year, behind your goal where you wanted to be. So you can really catch them as you go.
100%.
So.
And you bring up, what that does is, another financial health checkup is, just being proactive. Mm-hmm. And if you don't know where you are, you don't know where you're going to go. So
right.
you really have to understand what's going on to be proactive and make those decisions. I see a lot of businesses say, great idea, and then they don't implement. Mm-hmm. And they take time. You got to take time. Make sure it's right, but they're not implementing them. So that proactivity, that quarterly meeting, you're talking about proactivity.
Yeah.
We'll have clients will say, I think it's time to find another building. Okay, so let's go and find that building. So they go out and try to find a location. By the time we get back together again, we look at the financials of it. We see if it makes sense. Mm-hmm. And they're working towards a goal. And that proactivity is just, it's so necessary in businesses. And they're just not spending time. You hear that a lot. Well, am I spending time in my business, out of my business, or whatever?
Where do you think most of the time suck is for a lot of business owners?
I think it's not that they're wrong. They're spending time trying to sell their product. Mm-hmm. They're trying to spend their time finding business. They're trying to spend time hiring people. Those are all those are integral parts. I wouldn't have grown we started as 4. We're now 125 total amongst all our divisions. And I'm a business owner too, mm-hmm. which is kind of a neat perspective that I have because I was,
You walk the walk.
I walked the walk.
Yeah.
I was preparing payroll. Mm-hmm. I was doing all that. Like a lot of business owners, a GMS model makes 1,000% sense because that's one of those things where you said they're spending their time. You got to spend your time there. So I think they're spending time what they believe is right, and I'm not saying it's wrong, mm-hmm. but they're not taking that back seat for a minute and just saying, let me just see what's going on.
Yeah.
And have advice from someone else that has seen things before mm-hmm. and can help you look at things a little differently.
Big picture perspective.
And get a perspective. Yeah. Get a perspective. Get something that you can kind of that they have from their experiences. You know, when I first started 35 years ago and started the firm, a pizza shop was my big client, right? And that's okay. That's what I was. But you know what? I still use some things I learned from that pizza shop that I learned 35 years ago that had 3 people in it to clients that I have now that have hundreds of employees.
Yeah.
And multiple locations around the country. But there's a lot of fundamentals that are the same. But the best business owners take that time. And you know, it's funny, we look in our office at the clients that have these meetings, that spend the time. Without a doubt, they are the most advanced, profitable, changing, adjusting client that we have.
Yeah.
There's some clients that can't meet 4 times a year, and I get that.
Yeah.
And there's a cost involved, so we have those twice a year. At least have some kind of check-in.
Right.
And
It's going to the doctor, right?
oh, exactly. That's what I say. The dentist, right? I go to the dentist. They say
Yeah.
every 6 months. When I'm not there, I get the text on my phone that I didn't go. Well, you're going to get a text from us to say when you're going to get
Can
together.
we talk about that for a moment? Because why do you get there and they're like, they will dead look you in the eye and they'll be like, what are you doing?
Yeah.
September 14th at 5 p.m. And you're like, I have no idea.
Yeah.
But they will try to schedule out 6 months, which I absolutely love. But
Yeah.
yes, hopefully that's not you guys.
No,
but
it's
yes,
not.
No,
Try not to
for
be.
Sure.
Try not to be.
But that is definitely a dentist thing for sure. But let's talk about, I have a couple notes here and I want to kind of talk through these because I thought
Sure.
they would be interesting topics. So you talk about hiring proactively, aligning the business goals to your family goals as well.
Yeah.
I think what you're talking about is work-life balance there,
Yeah,
right?
yeah.
Oh my God moments. I don't know what you mean by that,
Yeah,
but I
yeah,
would
yeah.
love to hear a little bit more about it. So
Yeah.
wherever you want to touch base on some
Yeah,
of
well,
those
I
things.
just think that, my wife Laura, when I decided to open up the firm, we were having our first child, and it was a part of the business decision we had to make.
Yeah.
Because your home has to match what's going on in your business. You have to have it set up efficiently. You have to do those things. I'm not like an efficiency nut, but I also understand that you have to adjust to those things. So we made a decision. She was a teacher, and she said, "What do we want to do here?" Because we both want to be a successful family.
Right.
And so you have to spend the time to make sure you have that conversation. And over all these years, I wouldn't be where I am without her because she took care of those things when there were times that I couldn't be home.
Right.
Or it was just what it was. Now, I got to baseball games, I went to basketball games. I wouldn't say I missed any of them.
That's great.
But that's because she helped organize everything at home to make it so I could be available at work when needed, and then I could make it to those things and took care of a lot of things like that.
I love that because I think you see a lot of messaging now where it's this grind 24/7, 365. If you're not working hard, then and I think that's good for like maybe the first couple years of your business, but it's not sustainable.
No.
You need time to spend with your family, and that's the reason you started your business, right?
Absolutely.
That's the reason that's your reason. So I love that. I think that's a great messaging to business owners.
Yeah, it's just you have to have that. There'll be chaos. Then there'll be chaos at work, and there'll be chaos at home.
Yeah.
Chaos at both of those, something gives.
Yep.
Right? So you can't have that. So you've got to have that support set up so that you know how it's done. I've never washed a load of laundry. But my wife's never cut the grass.
Yes.
Is that wrong?
No, not at all.
Not at all.
You have your lanes that you're good at.
You have your lanes,
Absolutely.
and that's okay. And now I folded laundry, but I've never washed it. But I'm just saying, we just have our things,
Yeah.
and we have a blast, and we do things, but we also understood what we were getting into, and made provisions for that. When we started out, we had no money, we had nothing.
Yeah.
We just didn't, and that was okay. She was fine. In fact, we just sold we had a vehicle for 25 years, and we finally sold it.
Wow.
And it was, my wife drove it, and she says, "I don't have any reason to want to change this. I think it's fine." And so we kept it.
Love it.
So you got to have that, she understood where we were and always has done that. So it's freed me up to be a good consultant and learn a lot with clients and spend the time necessary, not all my time for sure. You do see that a lot on social media. Social media is tough on business owners. It's tough to make decisions. Everybody's telling you different things.
Yeah, there's so many messages
there's such a theme that you got to stay with.
Yeah.
And that life balance and business balance, you have to have that. But make things organized in your life. Don't let it drift away, because you just can't get it back.
Yeah.
And so yeah, I've spent lots of time. We went on vacations, we did all the kind of things. But when there was a Tuesday night and nothing was going on, I'd stay at the office till 11 o'clock. Why not?
Yeah.
There was nothing going on. I mean, the kids were there.
Yeah.
They were going to bed, and I thought one
That's
day
your
of the week.
work-life balance, right?
That's the work-life balance. Is you find a time when you can and spend that special time with your family, because you'll never get that back.
I love that.
And you just have to do it. But you can do it. You can do it if you communicate and handle things properly.
But plus, you want to make sure you're set up financially. So looking, working with your CPA, making sure that you have the ability to do that.
Absolutely
as well.
Absolutely.
Talk to me about, I know you shared a story with me prior about a client of yours who held on to a bad client.
Mm-hmm.
And how did that hurt his business? Could you share that story with us?
Sure.
Yeah.
Interesting. It's not far from here. Okay. And it was a client that, we got him as a new client, and his financials were not in correct order, so we got those first and foremost in order. They got part of our strategy meeting, so every quarter we were meeting with them, and he'd never had that before, and it was a family business that had been around for a while. So he spent the time, made sure everything was going, make sure he understood everything, I guess you could say, more than anything, and he understood. And we brought his sales manager in to the meeting once in a while, because he had some questions about sales and things like that. And again, as a consultant and CPA, I've seen so much that can kind of give some so pretty soon clients start bringing me in all sorts of meetings. I've been in a lot of meetings, which are a lot of fun. And this was one where they invited him in to the meeting. Anyways, as we dug a little deeper, their largest customer was just not a good customer.
Okay.
The customer was relatively abusive to the staff, very demanding, and not demanding in the right way. Sure, there's demands of clients that you live with.
Yeah.
But this was unreasonable demands, always complaining about pricing.
Okay.
Just monopolizing his staff.
Yeah.
Monopolizing his company. So much so that the company, again, had a very strong balance sheet.
Yeah.
So because of that, my recommendation was to fire that client. And it was about 30% of his business at the time.
That's so scary.
Very scary.
Yeah.
And it was, a well-known national company.
Yeah.
And he said to me, "Are you sure?" And I said, "I think so." But I just said, it's telling me it's the right thing to do. But the day after he fired that client. So the day after you fire them, he had a weekly sales report, and you had the bar graphs, and then it went zoop, it went down.
Yeah.
And
that's
he was
scary.
very scary.
Yeah.
It was very scary, but strong balance sheet, strong, could withstand, had lines of credit, had cash, was in good shape. So, but he was telling him about the list of customers that he couldn't get to, that his staff couldn't get to, because this customer was monopolizing him so bad. So his directive was to go out there and get those customers, and they did.
That's
and
great.
they not only replaced it all, they replaced it at +2.
Wow.
Amazing.
Yeah.
And these were all good gross profit customers.
Yeah.
They were paying fairly for the product. Nice to work with, not demanding, and so on. And to the point that his company was worth X dollars, $5 million, let's just say, at the time when he was doing it. Because remember, when someone's valuing your business, they're valuing everything.
Yeah.
They're valuing what customers you have, what profit you have on those customers. When we do valuations, all those things come into consideration, how your company is. If you have only one customer, your company's not worth much, even if you're making a lot of money.
Oh, yeah.
It's not worth it.
Because if you lose them,
It's gone.
it goes down to zero.
And your
right?
staff,
Yeah.
and just so many things go into a valuation. So he was worth maybe $5 million at the time. Fast forward 5 years later, sold his business for $30 million.
Wow.
And his volume, in the end, was only up about 25% of where he was at that time. So it wasn't volume.
Yeah.
It was profitability, and now he had a nice array of customers that were good to work with.
Yeah.
And so very attractive to a buyer. So things like that are that's when you spend the time.
Yeah.
And you might be looking at things in one direction when you're looking at your financials, but it's actually going to take you down a different road. Sometimes all of a sudden you start finding some other issues. So very satisfying. And now he's very happy.
Of course. I would assume so.
He's
Absolutely.
very happy now, so it's all worked out good.
That really tells you it's quality over quantity.
Yeah.
sometimes. Like, and I think too, and even I've seen in sales too,
Sure.
because I work a lot with our sales reps, but where you hunt the whales, right? Oh, let me get a big customer that's going to like make me a lot of money. And it's not always the case. Sometimes they do, they waste your account manager's time. They waste your support time. They waste the time of your employees, where you could go out and get maybe 5, 10, 15 customers to replace that big one and be even more profitable.
It's so true. And I've seen it over the years that
Yeah.
usually when you analyze that big whale,
Yeah.
it's not as good as you think it is.
Yeah, and then if you lose it, it's scary, right?
It's very
so
scary.
I
Very
think that's
scary.
great. You got to
Yeah.
diversify a little bit, and I think that's the same in investments.
Yeah, but that's real life, and I have other stories like that over the years. Same thing of different decisions that people decided to make that were difficult, and you got to take that time to make that difficult decision when you need to.
Yeah.
And that's what I say about being proactive and understanding that, because some businesses just go on and on and on with just the same old.
Yeah.
And
It's comfortable,
they're not.
right?
It's comfortable.
Change is
Yeah.
hard.
Well, yeah, exactly. And he was comfortable, and he would have continued on with that and been miserable.
And just had the status quo forever,
Status
right?
quo forever.
Absolutely.
Exactly.
I wish I would talk to you forever if I
Okay,
could,
good.
because
I'd
definitely
love
can't,
to.
but I don't have that much time today. I do want to wrap up with just a couple questions for you.
Sure.
So I do think that, and I love that story too, and I think that there are some business owners out there who, A, are looking to grow, and B, looking to maybe exit their company, so sell it. What, I know those are different things, right? But maybe give us some advice for those two business owners.
Yeah, if you're trying to grow, it's about the people, and I know that seems cliche, and that's what you hear all the time. But when you're trying to grow, it's very difficult to do it yourself. So, proactively hiring those people that are going to help you grow is really where I've seen businesses grow, extensively.
Yeah.
And put in a good base of what there
Yeah.
is. And so I just think growth is more about thinking about what's going to do it. I mean, really sit down and map it out. Say, what am I going to do? Just like GMS, and you're in so many states now and things like that. GMS has done a great job in getting in those areas that the stretch out of looking for opportunities is there, and it's a definite goal. Businesses have to make that goal.
Yeah.
And they have to think about those goals and then think what they have to do with those goals. And if you spend the time, it's amazing how you can make some good decisions in your business. But growth is really, it's just a difficult thing to do with yourself or a small group of people.
Oh, yeah.
You have to be strategic about that. And you might go through 5 people before you find the one, but be patient. They're out there.
Oh, yeah.
But I always think as people is the growth, it's very difficult to not have those people around you. And those people can, in my business, we have now a full range of our CFO and our CEO and all those type of things that allowed me to grow, allowed our business to grow, and allowed me to grow.
Yeah.
So I'm following my own advice that I said, I really need that. And
You gotta delegate. You gotta put some things to other people.
got to. And
Yeah.
what was President Bush said, trust but verify, right?
Yeah.
And so I trust those people, and that's what it takes. And you got to be able to be in a position for trust,
That's great.
And when you talk about value of businesses, I could talk forever on that. But, think about it. I always say to business owners, think about it. If you wanted to buy your business, what would you ask yourself?
Ooh.
And what do you see as your good and your weaknesses?
Okay.
And think about it. Would I buy this business? And when I say that to clients, would you buy you, and why wouldn't you? And he says, well, for this reason or that reason. These are really good things. And these are things that maybe somebody's going to uncover. And I said, let me tell you this. I've bought and sold a lot of businesses in my life for clients. And I can tell you, we'll find it. It's not me, but the buyers will find it. If there's a weakness, they'll find it.
Yep.
And so think about those weaknesses that you have in your business, whether it's you've got poor collection procedures, whether your product is becoming obsolete.
Technology stack.
Yeah,
Anything.
technology stack.
People.
Yeah, people. Do you need to improve your product? What do you need? What would you look at to say, what do I need to do to make me more attractive? What would I like to see? And usually the answers come out pretty good. Sometimes they're missing a few things, and we'll explain a few more to them, but that concentration in customers,
Yeah.
not having the management team in place, your gross profit margin is diminishing. Those type of things are all what we call value drivers.
Yeah.
And we spend time with our clients just going through the value drivers. And what are those value drivers that someone will find useful for their business and be able to adjust to make their business just much more valuable by sometimes having the same. I tell the story, I've had clients that have $1 million of net income and their business is worth $1 million. I've had clients make $1 million of net income and their business is worth $20 million. And you'd say, with both $1 million of income,
Right.
I don't understand.
It's the future revenue is what you're looking at.
It's the future, but it's also the setup.
Okay.
What is generating that?
Gotcha.
What's the risk? Valuations, when we do them, actually the net income is important. It's very important, but the risk profile of that client. And we analyze the risk profile, and that risk profile goes down all those areas of the concentration and your management team and your product and your gross profit and sort of your trends. And that risk generates more to a value of a company than your net income does.
Gotcha.
But that's true. I've had clients worth 20 times, and I have clients worth 1 times.
Wow.
And I've had clients shocked both ways. I've had them shocked when they go, "You're kidding? You think that's really what I
would
worth?"
rather be shocked the second way.
Yeah, I think so.
Personally.
Right.
Yes,
I've had them
yes.
shocked both ways, where they'll say, "Really?" And I'll say, "Yeah, it's really this." And sometimes I get the frown. "Really? That's all I'm worth?"
Yeah.
And I say, "Well, you haven't spent the time to do these things."
Yeah.
And it's great, and not that you can go home with $1 million, you can do fine, but if you're looking for something more, it's not going to be there. So risk generates that valuation. So you really got to de-risk your business as much as you can and think of every sector: your staff, your location, your rental situation, your clients, your vendors.
Yeah.
A lot of times I have clients, it's funny, we'll talk about their concentration of their customers. We'll talk about the concentration of their vendors. Because that's just as important sometimes.
How many do you have?
How many do you have?
Yeah.
I have a client that
Streaming
does
services, right?
Yeah, I have a client that does some very detailed work in the water business, and so we always talk about what vendors does he have, because if that vendor doesn't sell to you or that vendor increases their prices, you better have 2 more to call on. And so he's constantly says, "Why do we spend so much time on this?" Well, eventually he knows why.
Yeah.
Because then something happens and he says, "Oh yeah," or it wasn't the right application or something like that.
Right.
So concentrated customers, vendors,
Yep.
those type of things are all very, very important. Your leases that you have set up with real estate. I had a client once that they bought a business from someone, and the reason they got such a good deal on it was because that person buying the business had a very bad lease, and they couldn't afford the lease.
Gotcha.
So we bought it from them, and we could fill it up with more materials, so it was worth it to us.
Right.
But they sold us their business for a fraction of the dollars because they had a bad lease.
Yeah.
So imagine that. The business actually does well, but they were loaded up with a bad lease.
Absolutely.
So they said, they had to get out of this, and they didn't know how to do it. So anyways, so even something like that values a business and what it's worth. So you really got to look at all those different areas.
Absolutely. Well, that's great. Thanks, Tom, so much. I'm going to end, and Colin's probably going to kill me, but I'm going to end on a question, a selfish question, if I can.
Okay, sure.
So how do you feel that a GMS solution can really help a business owner in both of those situations?
Yeah. Well, as I said, you've got to concentrate on the things that are most important in your business. Your employees are your most important thing in your business, hands down. So number one, you've got to have that payroll done properly. You've got to offer them the best benefits that you can. Of course, that gets expensive. You have to be able to have that solution of an HR person to talk to. Just like you're talking to me, you've got to have an HR person. If you try to just say, I'll figure it out, you're probably going to make a mistake. So, and as I said, that the GMS solution just takes it off your table and you can concentrate on all these things I've been talking about, spend time doing this and spend time doing that, why you ever would not have all those benefits available to you at a very good price for the health benefits and the 401k plan. You know, we've been, again, working for 20 years with GMS, and I've had clients here, and they just say, wow, is this great? Because I didn't have to worry about it.
Yeah.
And I had that phone call to an HR person that I could rely on. And if there was an issue with workers' comp, they take care of it for you. So just spending that time where you really need to. But, you know, it's your employees are so important, so you got to get it right. You don't have an ability to mess it up.
Yeah.
And somebody else is going to take care of them if you don't. So you better have the best benefits and all the opportunities you have with GMS. And that comes from my heart, because I'm telling you, that's just what's so important is to be successful. You have to look for every area of that. And GMS offers that solution. I've had clients over the years that try to have their own HR person, and it was terrible.
Yeah.
You know, it was whatever it was. And then trying to get health insurance today, how expensive it is, and seeing these 20 and 30 and 40% increases is just, it's not sustainable. You know, we talked about gross profit. When you start changing something that's, you know, an overhead expense, and you raise it by that much, you have to sell, you know, if you got a 30% profit margin, you have to sell 3 times as much of that number to pay for it.
Right.
You know, people don't realize that when you're spending too much in those overhead expenses, that how much more you really have to generate in business to pay for them. It's expensive.
Yeah.
So you have to get good benefits. You have to have a good 401k plan, and you have to have those resources that just help you run your business more. So that's why I would say every day of the week, come on, it makes sense.
Yeah.
It just makes sense, and it does for sure.
Yeah.
So it's
I promise we didn't pay him to say this.
No, you did not pay me to say this. No, not at all. Not at all.
Well, I so appreciate your time, Tom.
Sure.
Coming out here to talk to us today. And I hope you guys also appreciated Tom's time and got some valuable resources out of this podcast. Thank you so much for joining us, and we will see you at the next one. Thank you for tuning into the People's Podcast. We hope you found today's discussion helpful. Stay tuned for more insights in our next episode. For more expert guidance and resources on small business management, PEOs, and more, give our podcast a follow. Find us on social media or visit us at groupmanagement.com. That's groupmgmt.com. We're dedicated to helping small businesses everywhere make their operations simpler, safer, and stronger.